Donald Trump Jr. on the board of a gun e-commerce company going public through a SPAC with the ticker PEW. You literally can't make this stuff up. GrabAGun just merged with Colombier Acquisition Corp and hit the NYSE as GrabAGun Digital Holdings, trading under PEW. The early action has been absolutely wild. Massive volume, volatility that would make crypto traders jealous, and the kind of retail excitement we haven't seen since the meme stock mania of 2021. But here's what really caught my attention. Barely any CLBR shareholders redeemed their shares before the merger. In SPAC world, where 80 to 95% redemption rates have become the norm, minimal redemptions are like seeing a unicorn. It means institutional and retail investors actually believe in this business enough to hold through the merger instead of taking their guaranteed $10 per share and running. They just raised $179 million in proceeds, and now we get to see if this becomes another DWAC-style rocket or just another SPAC that crashes back to earth. The setup is almost too perfect. Controversial industry, Trump family involvement, catchy ticker, actual revenue-generating business, and a market that's primed for the next meme stock. Fox News has been covering this all week. Conservative media is losing their minds with excitement, and financial Twitter is split between people calling it the next big thing and others warning it's a disaster waiting to happen. Let's get into the actual business, because that's what separates real investments from pump and dumps. GrabAGun isn't some startup with a PowerPoint deck and dreams. They've been selling firearms online since 2011. They're fully FFL licensed, follow all federal and state regulations, ship to local dealers for background checks and pickup, completely legal and by the book. The online gun market is absolutely exploding, while traditional gun stores are struggling, just like every other brick and mortar retailer. Young gun buyers don't want to deal with the often intimidating atmosphere of traditional gun stores. They want to research online, compare prices, read reviews, and buy from their couch. GrabAGun figured this out over a decade ago and built the infrastructure to serve this market. What most people don't understand about gun e-commerce is that the unit economics are incredible. Average order values run $600 to $1,500 compared to maybe $50 to $100 for typical e-commerce. A Glock 19 costs $500 to $600. But that customer also needs a holster, $50, $150. Extra magazines, $25 to $50 each. Ammo, hundreds of dollars annually. Cleaning supplies. Gun safe, $200 to $2,000. Optics, $100 to $1,000. And the list goes on. Customer lifetime value can easily exceed $10,000 because gun owners rarely buy just one firearm. It becomes a hobby, a lifestyle, a continuous purchase cycle. The data play here is massive, too. Every gun purchase requires extensive paperwork and background checks, so GrabAGun knows exactly who owns what, when they bought it, what accessories they need. They can send targeted emails about holsters for your specific Glock model, recommend optics that fit your AR-15's rail system, alert you when your favorite ammo goes on sale. This level of personalization is gold in e-commerce, and unlike Amazon or other retailers, GrabAGun can't sell this data due to privacy laws around firearm ownership, creating a protective moat around their customer relationships. The Trump Jr. factor fundamentally changes the dynamics of this stock in business. He's not some ceremonial advisor getting paid to show up twice a year. He's an actual board member and shareholder with real skin in the game. His social media reach is staggering. 12 million followers on Instagram, millions more on Twitter, X, regular appearances on Fox News, Joe Rogan, and every major conservative media outlet. For context, most e-commerce companies spend 20 to 30% of revenue on customer acquisition through Google Ads, Facebook, Instagram, and influencer marketing. But gun companies can't buy most of these ads. Google restricts firearm advertising. Meta, Facebook, Instagram bans gun sales ads entirely. Even YouTube demonetizes gun content. Traditional gun retailers are stuck with SEO, email marketing, and word of mouth. But Trump Jr. posting about GrabAGun to 12 million engaged followers, that's free customer acquisition worth tens of millions of dollars. If just 1% of his followers become customers, that's 120,000 new buyers acquired at zero cost. The cultural element matters too. Trump Jr. represents a certain lifestyle and values to his followers: hunting, Second Amendment rights, American manufacturing, conservative politics. When he endorses GrabAGun, it's not just a business recommendation, it's a cultural signal. His involvement also opens doors that money can't buy. Gun manufacturers are notoriously relationship-driven. Having Trump Jr. call the CEO of Smith & Wesson or Glock probably gets you better pricing and exclusive products that competitors can't access. The media attention alone is worth millions. Every article about Trump Jr.'s gun company is free advertising to exactly the right demographic. This isn't theoretical. We saw the same playbook with DWAC, where Trump involvement turned a nothing SPAC into a multi-billion-dollar meme phenomenon. But let's be brutally honest about the risks, because they're massive, and anyone buying this needs to understand what they're getting into. First and foremost, this is still a SPAC, and the track record of SPACs is abysmal. Studies show 90% of SPACs trade below their $10 IPO price within 2 years. The structure is designed to enrich sponsors and early investors at the expense of retail buyers who come in post-merger. There's massive dilution coming from warrants, 30 million additional shares at $4.60, earnouts for hitting performance targets, and sponsor shares that got in at pennies on the dollar. The lockup structure provides temporary protection. Sponsor shares are locked for 6 months or until the stock trades above $15 for 20 out of 30 days. But if this means to $20, $30 quickly, suddenly millions of shares become available to dump on retail buyers. The gun industry itself faces unique challenges that make this riskier than typical e-commerce. Payment processors like Stripe, Square, and PayPal often refuse to work with firearms companies. Banks are reluctant to provide financing. Insurance costs are astronomical. Every mass shooting creates political pressure for new regulations. Blue states keep passing laws that make online gun sales more difficult or impossible. California's roster system, New York's SAFE Act, magazine capacity limits, assault weapon bans. The regulatory landscape is a minefield that changes constantly. Then there's the competition. This isn't some virgin market waiting to be disrupted. Brownells has been around since 1939 and offers 90,000 plus SKUs. Palmetto State Armory does $500+ million in revenue and manufactures their own rifles at better margins. Optics Planet does $700+ million across outdoor categories with sophisticated logistics. Bass Pro/Cabela's has massive retail presence plus e-commerce. Even Amazon, while not selling firearms directly, dominates accessories, optics, and everything else gun-related. GrabAGun needs to explain why customers should buy from them instead of established players with better selection, pricing, or faster shipping. However, the opportunity is equally massive if they can execute properly. The online gun market is growing 8 to 10% annually, significantly faster than overall e-commerce growth of 3 to 4%. This isn't just steady growth, it's accelerating as younger generations become gun owners. Millennials and Gen Z are buying firearms at record rates, driven by concerns about personal safety, political uncertainty, and a growing interest in shooting sports. These digital natives don't want to haggle with some grumpy gun store owner. They want the Amazon experience for firearms. The total addressable market is enormous and expanding. There are 100+ million gun owners in America, and the average owner has 5 firearms. New gun owners are being created faster than ever. 8.4 million Americans bought their first gun in 2020, another 5.4 million in 2021. These aren't one-time purchases. They become repeat customers who need training, accessories, and more firearms as they develop the hobby. International expansion represents a massive untapped opportunity. Countries like Czech Republic, Poland, Switzerland, and Brazil are liberalizing gun laws. American gun culture is spreading globally through social media and entertainment. GrabAGun could be the first mover in bringing American-style gun e-commerce to these markets. Imagine being the dominant online gun retailer across multiple countries. The TAM expansion would be astronomical. The acquisition strategy is compelling, too. COVID destroyed many small gun stores, and owners are aging out with no succession plans. GrabAGun could roll up regional chains for pennies on the dollar, acquiring their customer lists, inventory, and local market knowledge. Buy a chain in Texas, another in Florida. Suddenly you have distribution centers for same-day delivery in major markets. The $179 million war chest makes this strategy viable immediately. The path forward depends entirely on execution and market reception. If today's trading momentum continues and retail investors embrace PEW as the next meme stock, we could see DWAC-style price action where fundamentals become irrelevant and momentum takes over. The ingredients are all there: controversial industry, Trump connection, catchy ticker, actual business with revenue. But meme stocks are dangerous games where early buyers make fortunes and late buyers become bag holders. The lockup expiration will be the first major test. If the stock sustains above $15 and unlocks early, will sponsors and pipe investors dump their shares or hold for bigger gains? Long-term success requires GrabAGun to prove they can deploy capital effectively. Can they build superior logistics and offer faster shipping than competitors? Can they leverage Trump Jr.'s influence beyond initial customer acquisition into sustained brand loyalty? Can they navigate the complex regulatory landscape without major setbacks? Can they expand internationally while maintaining compliance? These are hard problems that money alone won't solve. Management quality becomes crucial, and we know very little about the team beyond Trump Jr. Who's the CEO? What's their track record in e-commerce or firearms? How much of their own money have they invested? The answers will determine whether this becomes a real business or just another SPAC disaster. For traders, the opportunity is clear but risky. The volatility we're seeing today creates opportunities for quick gains, but also devastating losses. Options might be the smarter play, defined risk with unlimited upside if it truly memes. For investors thinking long-term, waiting 3 to 6 months for the post-SPAC crash might provide better entry points when emotion fades and fundamentals matter. But in this market, with this setup, waiting might mean missing the entire move. The collision of guns, e-commerce, Trump, and meme culture has created something unique in the market. Whether PEW becomes the Chewy of firearms or just another failed SPAC, it's going to be one hell of a ride to watch unfold. If you found this breakdown valuable, hit that like button and subscribe for more no BS analysis on markets, SPACs, and everything in between. Drop a comment. Is PEB the next rocket or just smoke and noise? Let's see who's holding bags 6 months from now. Stay sharp, stay skeptical. I'll see you in the next one.